Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
Just dropped game-changing news. This article was written by Cash Flow Venue. Summary. Micron Technology's CEO dropped game-changing news about his outlook on the demand for memory solutions in the upcoming years. To address global shortages, MU has recently announced massive capacity expansions, with $200 billion committed in the US, $24 billion in Singapore, and a $1.8 billion DRAM fab deal in Taiwan. The hyperscaler CapEx projections support durable industry tightness and sustained memory shortages through at least 2027. The combination of these factors makes me confident about the scale of opportunity MU has ahead of itself. Despite a 550% plus stock run, MU still trades at the lowest forward PE among peers, while offering the highest expected top-line growth. I have to say this at the very beginning. Micron Technology MU was my most successful investment in 2025. There's even more to that, as I see it keeps growing its stock price at a very dynamic pace. I will give you a brief background around my journey with MU. I first invested in 2024, when I declared MU one of the best picks in the AI hardware landscape. Initially, the investment did not perform well. I saw the stock price falling gradually over months, as it reached as low as the $60 per share in April 2025. That's when I decided to trust my initial analysis and put even more money where my mouth was. I doubled down, and that was my best investment decision of 2025. I published an article about it, and I believe that those who joined me are now quite happy with MU's performance. Since then, its stock price grew by over 550% over the course of less than a year. That's by far my top-performing purchase from that time. Now, Micron is one of my favorite businesses to review, as there's a lot going on around the firm. I still keep it in my portfolio. I still haven't sold a share. The last time I covered MU, I declared it a strong buy and made the case that the ride had just begun. You can read the article here, as it also includes the last earnings review. Since then, I saw the stock price grow by over 57%. I decided to prepare this follow-up coverage as Micron shared some news that I think further facilitates my bullish stance, especially the CEO's comments, which I consider game-changing. So let's review this step by step. MU's market segment. I don't think this will come as a surprise to anyone that Micron is one of the greatest beneficiaries of the AI revolution. It's similar to NVIDIA, NVDA, in a way that it provides shovels and pickaxes during the gold rush. Micron focuses on hardware. But don't get me wrong, it's not like MU is NVDA's competitor. I like to think of them as providers of complementary goods. The AI revolution and the growing demand for data centers need both NVDA's GPUs and MU's storage and memory solutions. The question I like to ask in such cases is, how long will that last for? Is this demand sustainable? The answer lies in the supply-to-demand relationship, and let me tell you, I see the demand growing each quarter. As noted in Credit Insights report from November 2025, key players in the market driving that demand will continue doing so in 2026. Hyperscaler CapEx 2026 estimates across major players discovered detailed projections showing Amazon, Microsoft, Alphabet, and Meta each exceeding $100 billion in annual CapEx, with capital intensity reaching historically unthinkable levels of 45 to 57% of revenue. We are projecting CapEx for the top 5 hyperscalers to increase from approximately $256 billion in 2024, plus 63% year over year, to approximately $443 billion in 2025, plus 73% year over year, and approximately $602 billion in 2026, plus 36% year over year. We estimate approximately 75% of the aggregate hyperscaler CapEx in 2026 will be for AI infrastructure. The non-AI portion includes CapEx for traditional cloud and other business lines. I saw the last interview for CNBC Micron CEO Sanjay Mehrotra participated in, and he confirmed such optimistic expectations about MU's future for the upcoming years. I'm pasting these comments below for you to review. AI-driven demand is accelerating. Micron CEO Sanjay Mehrotra told CNBC's Jim Cramer, "It is real, it is here, and we need more and more memory to address that demand." We see that tightness continuing into 2027, So we see durable industry fundamentals over the foreseeable future, driven by AI demand, Micron said. Micron is taking action. I judge management teams of businesses I own by several criteria, with the most important one being coherence between actions and words. It's not that obvious to me that companies actually follow strategies or outlooks that the management teams share during interviews, earnings calls, etc. Fortunately, I think MU makes it clear that the CEO's remarks were more than just an interview. I view them as a strategic outlook that the whole team is trying to follow and capitalize on that opportunity. Please remember that demand is just one side of the equation. I like to remind investors that being able to meet that demand with sufficient supply is equally important. At this point, I see a shortage in the memory supply. I think Micron will be one of the best businesses to capitalize on that. Its products are highly demanded, as they are essential to data centers. Memory is in a worldwide shortage and seeing a surge of demand. Memory is used in AI systems to keep large amounts of data close to the graphics processing unit, or GPU, so it can run large AI models without slowing down. Okay, so what are these actions that I see Micron taking? I'm talking about large investment initiatives, starting with the US. Micron said that Micron is spending $200 billion to build more production capacity in the US, including 2 fabrication plants, or fabs, in Idaho and a 600,000-foot facility in Clay, New York, where the company broke ground on Friday. Micron said it will take a few years to build out the facilities, including clean rooms and production equipment. I think the investment in the US is also for another reason, not just increasing its production capabilities. With that, Micron stays on a relatively safe side of the US president and potential tariffs related to the semiconductor market. Still, Micron is developing its presence abroad as well. I saw the company has just shared its plans to invest as much as $28 billion in Singapore. Micron Technology broke ground on an advanced wafer fabrication facility on Monday, located within the company's existing NAND manufacturing complex in Singapore. This new facility represents a planned investment of approximately $24 billion, SG $31 billion over 10 years, and is designed to ultimately provide 700,000 square feet of cleanroom space. This facility itself will likely start the output in 2.5 to 3 years from now. I also read this as a strong signal. Micron is not investing in just ready-to-go facilities or contracts. I see such investments as a confirmation that the company expects strong demand even further than just 2027, making my bullish stance even stronger in the long-term perspective. That's not the end of MU's major investments that I've noticed recently. As reported by Reuters, Micron Technology said on Saturday it had signed a letter of intent to acquire PowerChip's P5 fabrication site in Tongluo, Miaoli County, Taiwan, for $1.8 billion in cash. Micron said it expects the deal to help boost its output of dynamic random access memory DRAM wafers, beginning in the second half of 2027. The purchase will add about 300,000 square feet of cleanroom space, a highly controlled environment needed for chip production, the company said. It will allow Micron to ramp up DRAM production in phases, at a time when global demand for memory continues to outpace supply, the company added. I want to make one thing clear regarding this deal in Taiwan. The transaction is not closed yet. I don't think the terms will change, as there are just customary approvals left to deal with, but the deal is expected to be finalized in Q2 2026. Potential risks to have in mind. Potential upsides are just one side of the story. I think investors should be aware of risk factors associated with each investment. I will briefly talk about the main risk factors surrounding Micron. Firstly, let's keep in mind that we're operating in a very uncertain geopolitical environment. I see there's a lot going on in tensions between the US and China and the US and Europe, and such tensions can often harm business, e.g. through tariffs. If Donald Trump decides to escalate the trade war, Micron could be hurt, but I think that MU's initiatives to invest in US facilities mitigate this risk. There's also the matter of the demand. Yes, I think the favorable supply-to-demand relationship will last for years, but I don't believe it will last forever. Mr. Market tends to get overly optimistic at some point. I don't think we're there yet in the case of Micron, but at some point it will be a time to trim. MU also has to be mindful of its competitors. I don't think they are going to allow MU to participate in this opportunity on its own. Still, I think that MU is the go-to provider of memory and storage solutions, and as long as it accelerates its production capacities, which is a risk by itself, it should outperform its peers. Valuation. MU remains quite cheap. I know that many investors are concerned that MU has become overvalued, but I don't believe that to be the case. Just take a look at the charts I'm pasting below. They present forward-looking PE ratios and growth expectations. Have you noticed that Micron trades at the lowest PE ratio out of companies included in the comparison? At the same time, I see it's expected to reach the highest top-line growth. I think these charts say it all about Micron's valuation. I think it remains too cheap for the outstanding opportunity it has ahead of itself. Now, I will take a look at some of its closer peers that also operate in the memory and storage segment. I don't see a forward-looking PE ratio available for these businesses, so let's look at the TTM metric. The data suggests it amounted to 41.3x for MU, 35.5x for Samsung Electronics SSNLF, and 15.5x for SK Hynix HXSCF. At first glance, one could conclude that MU is overvalued, but I don't think that to be the case. Samsung's multiple is comparable, but what concerns many investors is the much lower multiple for SK Hynix. Please keep in mind that US businesses typically enjoy premiums over peers from other countries. Also, the market is large, it's growing, there are shortages among top clients. I think there's more than enough space for each of these businesses to excel. With that context, I don't judge MU as overvalued based on SK Hynix multiple. At most, SK Hynix could be an even stronger opportunity at this point, but I will discuss that in a separate coverage. What matters to me the most is that MU looks like a great buying opportunity when compared to leading US-based hardware players. My conclusion? MU remains a strong buy. Micron Technology remains a strong buy for me. In fact, I've just added more shares to my portfolio. From my point of view, Micron has everything going for it. Strong demand in a highly attractive market was supported by the AI revolution, dynamic revenue growth, and still a reasonable valuation. The management's words align with the company's actions, which makes me confident about the management quality. MU's investments will help it address global shortages of memory solutions, and they will likely prove effective in the long term. That's why MU remains a strong buy for me. This article was written by Cashflow Venue. Meta rejoins AI party.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.